Good morning and welcome to Bloomberg Quint, India's first digital live streaming business news service. I'm NIIT Tech and you're watching IndianOpen this Monday morning. Let's go straight to the headlines at this hour first. The board of Lakshmi Vilas Bank has approved a merger with mortgage lender Indiabulls Housing Finance in a share swap deal. The merger is subject to regulatory approvals. Baring PE Asia and its arms will acquire 56% stake in NIIT Technologies for nearly 5,000 crores. This will include an open offer for 26% stake. Tata Steel's domestic production rose to record levels in FY18 after the acquisition of Bhushan Steel, according to a company statement. And former BJP MP Shatrughan Sinha joined the Congress party on Sunday. The two-time MP will contest from Patna Sahib constituency in Bihar against Law Minister Ravi Shankar Prasad. And then there is HDFC Bank and a couple of other companies which have come out with quarter four updates, which we will talk about. But first, the trade setup for the day. The world markets seem to be an okay place. The Dow, the S&P, the Nasdaq, it was the second straight weekly gain. Sentiment boosted by strong job data and the trade deal hopes as well. And the last couple of weeks in particular, I mean, it's not just what's happened in the week gone by, and not that the gains are really strong, but the last couple of weeks has seen a bit of a trending move on the back of some optimism around a potential trade deal. So that's something that everybody who is looking at the world market should be monitoring, that it seems to be a decent enough outing for the world markets. Of course, the cues are being felt in Asia as well. It's not a bad start. Flattish, you could argue, for the Nikkei and some of the other. The Shanghai up about 0.7%. The SGX Nifty indicating a start which is very, very flat in trade. But largely, the mood around the trade deal seems to be optimistic. And, well, the jobs data was very interesting from the US side. Amidst all the talk of the recession, I think the jobs data was reasonably okay. How is the trade setup for India looking like? Well, autos, metals led the gains on Nifty in the week gone by. So you now have the other rate-sensitive pocket, which is autos, real estate, etc., coming back. Metals as a high beta pocket is making its presence felt. So it's not just left all to banking. The other indices are now putting their hands up. The only issue with last week's move was that markets were unable to close decisively against the previous swing highs, and that is something that you need to monitor. Now let's wait and watch what happens. Do we go take out the 11,761 mark convincingly, or do we meander along these levels, because it is also a very, very important week, and we'll come to that. Flows were positive in Friday's session at least. The FIs pumped in nearly 800 crores, even though DI sold. But like I said, there are a few things that one needs to monitor when it comes to the Indian markets as well, very, very closely. And what happens in the world will impact our markets too. Firstly, oil. And oil has been on a bit of a boil, really. Last 4 or 5 weeks, I think oil markets have had a really remarkable up move. 5-month highs on strong reports, Libya conflict, and with oil staying higher, that should act as a party pooper for a bull in the Indian market. We're not quite paying cognizance to what's happening in crude, because it's not taking out that 70 level and moving higher. It's now steady around these 70 levels, which a lot of people believe is okay for our markets. But watch out, what if the levels were to move up higher? It is not coming off. That's the key thing, and these are not demand side issues but supply side issues which are leading to crude prices doing what they are doing right now. Aside of that, a lot of other news flow this week. Firstly, news flow around the US-China trade truce, and I carefully use that term, not trade talks. They're not trade spat, but trade truce. That's something that everybody needs to monitor. There is, of course, the first phase of Lok Sabha polls, which kickstarts from 11th April, and that is a very, very important monitorable. We'll watch out for earnings season kicking off. Infosys and TCS in a meaningful way kickstart earnings this week from the 12th of April, and the CPI and the IIP data coming up on the 12th of April as well would be something that everybody would be watching out for. However, while we talk about a lot of macro events which will have a bearing on the markets for the week and for the month, there are some stocks that should react or could react in the session today. Expect, in all probability, decent reactions here in all of these. So firstly, Indiabulls Housing Finance and Lakshmi Vilas Bank. The merger ratio is in favor of Lakshmi Vilas Bank. Now, we can get into a debate, and we will get into the debate about what could be the step ahead. But just looking at this ratio that has been announced, you would expect that Lakshmi Vilas Bank could have a move up today. and Indiabulls Housing Finance in all probability could have a move down today. That is what almost all traders and all experts that I spoke to seem to believe. Let's wait and watch what happens here. Collateral benefits coming into some of the others. So Indiabulls Integrated Services, Indiabulls Consumer Finance, having bank insurance is a great thing for an insurance player, right? I think the integrated services business is about the insurance vertical, and let's wait and watch if there are some upsides to these names. So you would watch out for all of these, as also you would watch out for the small banks in listed, and maybe some with South focus. I'll leave out DCB because that has never been in the sway of a merger, but all the others people would believe at some point of time could get merged. And with LVB getting such high valuations, for today's session, for a trading move, you could well anticipate some activity in these names. So let's wait and watch. The volumes will definitely be higher in some of the other banks as well. You could argue about whether fundamentally that is right or wrong. That's a separate question altogether. From a trade perspective, these stocks would be active in the session today. Moving on from Indiabulls and LVB, I think NIIT Tech will be in focus. I need to sell the entire stake to Baring P. NIIT will get some money as well in the process. So both of these names should be in focus. And lastly, the big boy HDFC Bank, the Q4 update came in. The loan growth remains strong at 24% YOY, up 5% QOQ. The deposit growth was at 17% versus 22% in the third quarter. But Morgan Stanley came out with a note, and I just want to dwell upon this a bit because it's arguably the largest banking stock in the country. Mentioned that the initial update indicates broadly in line and strong trends. I think that's the key thing. The trends are strong, and therefore this should only augur well for HDFC Bank in the session today. Steady state expected, trends are strong. The street should not get unduly worried about the higher valuations, I would presume. However, HDFC Bank is not the most important stock today. Let's talk about the most important financial set of names, and that's LVB and Indiabulls Housing Finance. There's the first thing on first word today. The probable merger between the two can create a diversified asset book, but there might be regulatory hurdles. Vishwanath Nair will tell us about it all. Baring P will hold majority stake in two midcap IT companies in India post the NIIT Tech acquisition. Agam Vakil will tell us the private equity firm, what it gets out of the deal. Then Tata Steel. It's crossing milestones in India, even as it grapples with restructuring in Europe and Southeast Asia. Nikki Mirchandani will join us with the production numbers that they've released. And in this election season, Jatin Mota will get you the stock portfolio held by BJP President Amit Shah. However, the most important piece of news is the board of Lakshmi Vilas Bank having approved a scheme of amalgamation with Indiabulls Housing Finance. The merger, if approved by RBI, would allow Indiabulls Group an entry into the banking sector, and the lenders hope to create a large, healthy and diverse asset book. Vishwanath Nair is standing by with the merger metrics and the way ahead. Vishy, I'll leave it to you. Good morning.
Good morning, Neeraj. So what we understand from this merger announcement is that the combined entity will end up having a loan book of about 1.23 lakh crore, deposits of about 31,000 crore. The deposits are entirely coming in from Lakshmi Vilas Bank. The thing with Lakshmi Vilas Bank's book is about 7,000 odd crore worth of those deposits are in the CASA, which is the low cost, actual low cost for 3.5–4% money. So the advantages for Indiabulls Housing are clear. The combined group's gross NPA will drop to about 3.5%, net NPA about 2%. That is clearly a benefit for Lakshmi Vilas Bank, which has been grappling with large NPAs for a very long time. Remember that for the capital adequacies in the bank, it's going to stand about 20.6% post-merger. Clearly, there are some benefits for both parties, but the question here is, what about ownership of the bank? So, according to the share ratio that has been, the swap ratio that has been shared by both entities, for every 100 shares held of Lakshmi Vilas Bank of 10 rupees each, the shareholders will get about 2 rupees worth of Indiabulls Finance shares, 14 shares of 2 rupees each. Now, this would clearly mean that the shareholding at Lakshmi Vilas Bank will get diluted. Indiabulls Housing is going to hold majority equity, about 92% in the final combined entity. Of this, the promoters are holding about 19.5%, and that is the key question here, whether the RBI will be swayed into approving a deal where a real estate specialist, somebody who's built his entire business around real estate, gets to hold about 19.5% stake in a private sector bank. The RBI has historically been against a business like real estate being funded by banks, especially, and even letting them entry into the financial services space. The RBI does not like that business. Now, the management at Indiabulls Housing Finance, when they spoke to us, they were clear that the RBI has never said this out publicly. That might be true, but
well, that is true.
If you were to read some of the decisions that the RBI has taken in the past, especially with Indiabulls Housing Finance, back in 2013 when they had applied for a universal bank license, the RBI did not give them an approval. At that time, the question was about fit and proper. And by and large, the RBI feels that the real estate sector is somewhere where the fit and proper will always create some issues. Anyway, so that decision is still with the RBI. That as and when they take is when we'll get to know. But when speaking to the press, the management at Lakshmi Vilas Bank made it clear that there had been some informal communications with the RBI. They also have 2 members on the board. While they did not specify whether 2 members voted in favor of the deal, they said that the board decision was unanimous. Now, this created a bit of confusion, saying that is the RBI giving some implicit approval to this deal? But the RBI came back in over the weekend and said
that was
very
the
clearly.
standout for me, right?
Yeah. So because I think that became sort of a headline.
Yeah.
That became sort of a headline because if the RBI, even before it has assessed the mechanics of the deal, 2 RBI board members on a bank's board have already approved it. So the understanding is the RBI will agree to it. But the RBI clarified that is not the case. The 2 members, in fact, did not speak up at all. They did not give their opinions because it's not their job. Their job is to watch the bank and its businesses. The RBI head office is going to make that decision as and when the bank submits those files, and then the RBI goes through the specifics of the deal. So that's what we know as of now. The RBI approval is going to be key in this entire matter, and whether they approve this deal or not is something that we'll get to know in a few weeks, maybe a couple of months.
Yeah, just a couple of things that stood out for me. One, you got to give credit to the Reserve Bank of India for coming out very, very swiftly and mentioning that, hey, this doesn't mean that it's all on board, because that was a question in the minds of a lot of people. I spoke to industry experts, honestly, and all of them had to say the same thing. The other thing is the street is completely divided. Even people who track banking as a space on the sell side are completely divided about whether this deal will meet the approval from the Reserve Bank of India or no. So that is one key monitorable if you're looking at this deal.
Yeah, I mean, the company Indiabulls has been facing a lot of liquidity issues since September. Probably one of the better ones from the pack, but still there is going to be some kind of issues with the capability of fundraising, ability to disburse for the loans. Earlier, Indiabulls Housing Finance has on record stated to Bloomberg Quint that they've only achieved about 70% of their quarterly target in the March quarter. They do about 10,000 crore per quarter worth of disbursements. They've reached about 70% of that. So, that is going to be an issue that always stands out, that access to funds. They'd said earlier that they're going to raise about 26,000 crore. Now, the company has, later in an analyst call, they clarified that guidance stays as it is, and they will go ahead and raise those funds, because anyway, once the deal approval will take at least about a year before everything's finalized. They will need funds to lend in the interim. But yeah.
The other thing that somehow stood out for me, just one last piece from my end. It shows a bit of, okay, I wouldn't use the term desperation, but it shows a desperate move of sorts, or a move which is has some other things to it for Lakshmi Vilas Bank with 30,000 crores of deposits, if I'm not wrong, to be valued at 4,000 crores.
Correct.
Look at the other options, right? South Indian Bank, market cap 31,075 crores, deposits of 76,000 crores. Karnataka Bank, market cap of 3,856 crores to be precise, and deposits of 65,000 crores. Now, you can always argue that some banks there would always be changes, but just look at that similar size of banks and the market cap to deposit ratio. LVB is exorbitantly valued in this.
That is true, especially keeping in mind the fact that, they have a huge NPA problem. This is not something that the bank wasn't a very healthy bank as such. It was on the footstep of entering into PCA, which would have meant that its lending would have been curtailed at some level. And if that happens, we all know that banks go into a long period of stress. So it was an ailing bank. Currently, it is still handicapped because of the NPA issue, because of capital problems. So all of that is getting addressed through this book, because obviously there's dilution of the NPA because of the large book that Indiabulls brings in. But again, all depends on what the RBI finally sees in this, because they're not in favor of anybody holding, individuals holding 10% 10% or more in a bank. They did that with Bandhan Bank and HDFC. So still need to wait and see whether they are agreeing to this ownership structure.
Yeah, Vijay, thanks so much for putting that into perspective. I must say though, for today's session, you could well see that a lot of stocks will react with the numbers that are at hand, and which is what I said in trade setup. Look for all of those small size banks, Karnataka Bank, Federal Bank, etc. All of them could well say that, hey, if LVB can be valued at 4 times, what wrong have we done? So do watch out for these names. Do watch out for Indiabulls Integrated Services, Indiabulls Consumer Finance, a couple of those small names as well. All of these could be interesting. Moving on. Baring Private Equity Asia and its arms will acquire 56% stake in NIIT Technologies for 4,890 crores. This would include the 30% stake held by the promoter NIIT and an open offer for 26%. Agam Vakil is standing by with the deal contours and how the company stacks up against peers now. Agam, good morning.
Good morning, Neeraj. Well, we always knew that Baring was in fray for Mindtree, but eventually bowed out because of some differences. And now, in turn, has gone ahead and bagged, NIIT Technologies. So let me just start off by talking about how they are expecting the deal to go through. So at the top, we have the promoters along with NIIT Limited, which holds significant amount in NIIT Technologies, where Barings will go ahead and buy that 30% stake. Now, to be precise, NIIT Limited, along with a bunch of other promoters, hold 30.6% in NIIT Technologies, and Barings is looking to buy 30% stake of that, and they're looking to pay around 1,394 rupees per share, which is roughly 3% premium to Friday's closing. So the premium isn't substantial; it's more or less around the current market price, and of course that value stands at around 2,627 odd crores. But after this, according to SEBI norms, they are mandated to go ahead with an open offer, which they will hold for an additional 26%, and that again it will be at around 1,394 rupees per share, amounting to around 263 odd crores. So the total will stand at around 56%. That is what Baring will seek to buy eventually in NIIT Technologies, and the total, of course, in terms of consideration, will stand at 4,890 odd crores. Now the question is, how does NIIT stack up against one, Mindtree, which was the other, investment that Baring was looking at, and two, against Hexaware, something that Baring already holds a controlling stake into. We all know that Baring, through its HT Global IT Solutions, holds 62% stake in the company. So here's about taking a look at revenues first, right at the top. Now, in terms of revenues, NIIT Technologies has the lowest, and it has also not done as well in the last 4 years. But in terms of projections, it is expected to accelerate a little more in comparison to Hexaware Technologies and Mindtree, as you can see. So in terms of FY19 through 21 CAGR, the expectations from Motilal Oswal, 13.4% for NIIT Technologies against 12.8% for Hexaware and 10.8% for Mindtree. Let's take a look also at the margins picture and what we can expect going in. And NIIT Technologies, again, clearly a bit higher as compared to Hexaware and Mindtree at a little over 18%. Now, this is as far as your growth prospects and profitability prospects are concerned, but what about your earnings and how do valuations stack up then when it comes to the future? NIIT Technologies currently, if you consider the EPS, FY21 EPS, it's largely in line with Hexaware Technologies at 14.5 times, and actually a tad cheaper when you consider Mindtree. So maybe Barings has got a slightly cheaper deal if it had gone for Mindtree. In fact, that worked out. But this is as far as their closest peers are concerned. What about the entire industry? So if you consider FY19 price to earnings currently, this is where Mindtree stands at 20%, almost the second most expensive stock after TCS. But NIIT Technology stands at around 19.4%, so this is the fourth. But if you consider the market capitalization, NIIT Technologies will be on number 10 as compared to several of the other companies. So it's not like NIIT Technologies is a very cheap company either, and it is largely in line with Mindtree's valuations. And this is as far as your valuations are concerned, which they seem is largely, well, factored in. The real question perhaps is, if Bearings already holds Hexaware Technologies, how will NIIT Technologies come in and complement Hexaware? So this is NIIT Technologies verticals, and as you can see, well, it's fairly evenly placed when it comes to banking, financial, insurance. But insurance is the biggest vertical for NIIT Tech. And of course, travel and transportation is another very, very big vertical for NIIT Tech. Now let's take a look at Hexaware Technologies. And this is where there could be some complementation, because travel and transportation, once again, a significantly large vertical for Hexaware Technologies. And let's not forget, on one hand, you have insurance where NIIT Technologies is focused in, and on the other hand, banking and capital markets, which contributes 42% to Hexaware. So Bearings does have a fairly, well, I would say, a diverse portfolio in its hands through NIIT Technologies and Hexaware. The real question almost everyone on the street will be asking is whether or not they will eventually look to merge Hexaware Technologies and NIIT Technologies, but that is complete conjecture for now. While there will be a lot of speculation, we'll only have the management eventually tell us about that and confirm after we talk to them about the same later.
Okay, Agam, just in a nutshell, to wrap this up, if you've looked at the brokerage notes that may have come in, or if you've spoken to analysts, what are they saying? What's the impact on both of these names, NIIT and NIIT Tech?
Well, of course, NIIT Limited will get a large chunk of cash, so we're likely to see an up move there. NIIT, it essentially means just a management change. In fact, the management remains NIIT Technologies. In fact, the management remains the same. We just have a change in ownership, and it's already been factored in because we knew that the promoters were looking to sell NIIT Technologies and the stake in that.
Okay, Agam, thanks so much for putting that into perspective. Do watch out for NIIT Limited in the session today that gets a chunk of cash. Should be net positive. Let's wait and watch. The next stock on focus today is Tata Steel reported its best ever production numbers in the last financial year. All this at a time when it started restructuring its operations in Europe and Southeast Asia. Nikki Michindan is here to take us through the details. Nikki, how much did Bhushan Steel help bump up the numbers?
Actually, if you look at the growth would have been higher had it not been for Bhushan Steel. But we understand that it's ramping up Bhushan Steel, and the capacity utilization of Bhushan Steel is also picking up. Just to give a fair color of how the numbers look like in operations, it's a 45% growth out there in production, YOY basis quarterly numbers. And the sales, including Bhushan, includes a 56% kind of growth. European business, that's a growth out there in terms of production number, 4% uptick. Sales, however, have remained flattish. There is no growth out there in European division. So any drag that you see this time around in Tata Steel earnings will be mainly on account of its two divisions. That is one, Europe, which has managed to stay flat, and the other will be SEA, that's the Southeast Asian business, where the production has declined 10% and the sales have degrown by as much as 5%. What goes behind the making of the numbers? Let's just quickly understand and address the Indian division first, where I mentioned that had it not been for Bhushan Steel, the growth would have been higher, but we understand that it's ramping up Bhushan Steel, which has started to do well for the company also. But if you look in isolation, just the standalone numbers, then it's a pretty growth out there for Tata Steel there. If you look at the numbers, it's a 45% growth, and had it been, and if you look at quickly at the South European now, if you look at the European business, there we've seen the growth out there, but then the sales have remained pretty muted. The production has grown on account of the resumption of its operation in one of its port, Talbot, which had been shut since in the last 4 months. So resumption of that particular unit has led to higher production numbers, but then the demand scenario out there in that market remains to be muted. Sequentially, you might just see some growth out there on account of improved in the market, rebar market sentiment out there. If you look at the Southeast Asian business, where the production has been actually has taken a hit on account of the maintenance shutdown that NIIT had seen, on account of which you also have seen some amount of decline coming in on the sales, because apart from demand scenario in that market typically also remains pretty subdued. So any kind of drag that you'd see in Q4 numbers would be on account of Southeast business and the European business. Net, however, if you're painting out a picture out there for all the steel companies and how they've done financially, since we also have sales number now out, it's quite a healthy picture that we're looking at. Tata Steel ex Bhushan Steel, if we look at just the production numbers, it's a growth of 45%. For SAIL, it's a growth of 9%. Now, why there is a discrepancy in terms of the growth out there? Now, remember, SAIL is growing at a capacity utilization level of around 65%, with a full optimized growth for Tata Steel. And in terms of the sales performance for Tata Steel, isolated basis, 46%, or standalone basis, it's a 46% growth there. And even in terms of SAIL, it's a 6% growth out there. Net demand outlook for steel companies, typically Tata Steel and SAIL, so far have been looking quite robust for that matter.
Okay, Nikki, thanks so much for putting that into perspective. So that's, of course, what you get from the quarterly updates from Tata Steel. Remember, a bunch of other quarterly updates have also come in. Like I said, HDFC Bank is the other interesting one. So do watch out for that one too. The Q4 number updates that came out showed that the trends remain very, very strong for HDFC Bank too in the session. So that's the other key monitorable in the session today. Time to take a break on First Word, actually wrap up First Word and take a break on IndianOpen. We'll be back. We'll talk, of course, about this deal with all our market experts. Both NIIT and Lakshmi Vilas Bank and Indiabulls Housing Finance remain center stage. And a bit later on, of course, talk to corporates about what's happening within the Agri space too, and the concerns around consumption slowing down. But after that, all of that is after this break, and immediately after this break, a full tilt towards the day's trade.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out there.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching IndianOpen right here on Bloomberg Quint Live. Good morning, Neeraj. Last week was relatively more volatile than what we've seen in the month of March, where it's just been one clear trend upwards. I mean, yes, last week you saw a little bit of exhaustion coming in, 2 days where the Nifty actually gave out. Friday was not bad.
Friday wasn't bad. We have failed to take out the previous swing highs, but Devina, this week is really interesting, both from a global macro perspective and the trade talks to local cues, earnings, elections, inflation data, what have you.
Yeah, it's a line of things you need to keep an eye out on, because it could get a little bit more wild. But interestingly, India VIX is not coming off that much. We're still above 18, and that could be a little bit of a worry, which could indicate whether or no more downside is left to come. We'll wait and watch. 18.39 on India VIX. Let's also talk about what happened in the futures and options space. Agam Vakil is joining in for that. Agam, good morning.
Good morning. Well, we did see a little bit of an up move for the benchmark indices last Friday, and that has culminated into some sort of buying when it comes to the Nifty futures, with a near 4% increase in open interest, and the Nifty banking futures also seeing buying, where open interest increased by around 2.5%. Devina, we were just mentioning the WIX. It is at heady levels, there's no doubt about that, currently at around 18.4, even though we did see 1.5% decline coming up there as well. But what is really interesting is the way your open interest has been changing. We're seeing a little more writing around the 11,600 and 700 puts, but this is largely also on account of the fact that we did see the Nifty come and move higher last Friday. Moving on, in terms of total open interest distribution, while we do see max OI around the 12,000 mark on the higher end, on the lower end, it is 11,500 put, which has significant OI. Now, in terms of stocks, or rather put-call ratio, of course, edging to, again, relatively high levels around 1.6 against 1.2. Adani Power and IDBI Bank in the F&O band. Jet Airways and Reliance Power too remain in the F&O band, but Diwan Housing Finance is the new entrant in this one. Besides these stocks, we're also keeping an eye on PC Jeweler, of which, we've seen a lot of traction considering a 42% increase in open interest. That's followed by a lot of other companies like Cipla, which is also seeing a lot of longs, another 36% added there. And we're also keeping an eye on, of course, Diwan Housing Finance, as we already mentioned, the 26% increase in open interest resulted to that, movement in the F&O band, and Ambuja Cement from the cement pack. So for other stocks, we are keeping an eye on as we move to today's day of trade. And we continue to keep an eye on the cement sector.
Right. Agam, thanks very much for that. So those are some stocks you need to keep an eye out on. Joining us now to talk a little bit more about individual stocks and what could happen going forward into the near and medium term. Avinash Gorakshakar, Head of Research at Joindre Capital Services, is here with us on the show. Avinash, lots to talk about. Lots has happened over the weekend and on Friday's session. 3 stocks I would watch out for. One is Indiabulls Housing Finance, Lakshmi Vilas Bank, and NIIT Tech.
I think clearly the action would be on Indiabulls Housing Finance and Crore Bank. Lakshmi Vilas Bank. I would believe that both these stocks have actually run up quite significantly, and now the markets would obviously await at what kind of commentary and approval the RBI gives, because clearly overall the merger looks definitely a proper fit, and looking at the kind of history of NBFCs taking over smaller banks, it won't be a surprise, Devina, we could see a lot of action in the smaller banks like say a DCB Bank or a Karnataka Bank, where possibly these kind of possibilities the market would now start discounting whether these banks would be up for kind of mergers.
But what did you think of the share swap, the actual number, and the indicative premium of about 35% for LBB? Sorry.
I think the premium definitely is very aggressive, and I think the merger ratio clearly is in favor of Indiabulls Housing Finance. Clearly, post-merger, how they managed to get a better ROE and how they managed to actually shore up their asset quality on a consolidated basis would be the key challenges. But I think clearly, in terms of the fit, clearly if the merger does happen, it could possibly mean that Indiabulls Housing Finance gets converted into a bank. And to that extent, there could be definitely a further re-rating. Maybe, in the first year, there could be a little bit of pain on the consolidation part. But in the next, say, 2 to 3 years, I would believe that, they could possibly manage the show pretty well, considering the kind of execution track record they have managed in the HFC business.
For today's session, Avinash, do you expect a correction in Indiabulls Housing Finance, and if so, how much?
I think, Neeraj, Indiabulls Housing Finance has moved up from almost 700 odd rupees to 900 odd rupees. So clearly, I think 3 to 4% correction is very much possible, and I think some profit booking is out because the news is already out. I don't think anything further needs to be clarified. So obviously today could be a day of some sellout based on the fact that now the news is out in the market.
Okay. The other follow-up to that would be, would you expect some activity in the small size banks? I'll leave out a DCB there because that's never been in the fray of a merger at all.
Exactly.
But Karnataka Bank, Federal Bank, South Indian Bank.
Exactly.
Would you expect some upsides there today?
I think exactly. I think the markets would definitely look at these banks because these are prime candidates, for some sort of a merger, and hopefully, with the kind of history we have seen with the Capital First, IDFC, and now with Indiabulls Housing Finance and Lakshmi Vilas Bank, I think definitely these are the banks which possibly could see a good amount of bounce. And I think clearly once RBI approval for this merger does happen, which may take a little bit of time, and overall the consolidation could take 8 to 9 months to get implemented. I think these banks would definitely be in focus at least for the next few days.
It'll be very interesting to see this simply because me and Vishy were talking about it in the morning too. The kind of premium that is being paid to Lakshmi Vilas Bank for the market cap that they have vis-a-vis the market caps that exist for all the others either mean that LVB is so exorbitantly valued because it's such a high quality bank that it should be trading at those 4 times book, or
but nonetheless, it still has its own PCA concerns. So.
Yeah, and therefore, even if you argue that the valuation should be corrective, I think today's session, we could see the activity out here, as Avinash was saying as well. So
there's such depressed valuations in any case within these smaller banks that would you let this probably give it a little bit of go for the smaller banks because the valuations nonetheless are so depressed.
In fact, Devina, the valuations are not the real reason investors would try to bet on these banks. I think obviously these are prime candidates for takeover, and obviously NBFC getting a banking license, this is an indirect way of getting a banking license, and I think probably the NBFCs for that reason are willing enough to pay that kind of premium. Maybe in the near term it may look little expensive, but it actually eliminates the process of getting a bank license fresh and then starting operations. So to a large extent the markets would obviously look at next 2 years how the balance sheet gets consolidated and how things pan out. But in the near term, yes, valuations for these banks for most of the NBFC players who have given, especially Indiabulls Housing Finance, looks to be on the higher side.
All right, stay on, Avinash. So much more to talk about. A lot of other stocks in news. We discussed Tata Steel. We haven't quite discussed HDFC Bank Q4 update. There are some other stocks in news. And of course, we spoke at length about Indiabulls Housing Finance and LBB with Avinash. We'll also take stock of what the other brokerages have to say about this. So Shefali as well as Darshan join in for that. Good morning, both of you. The big news first. We discussed at length about it, Shefali. But what have brokerages made of it?
Good morning, Neeraj. So first to start with, CLSA has put out their note on Indiabulls Housing Finance and Lakshmi Vilas Bank. So they are saying that the deal values the Lakshmi Vilas Bank at about 35% premium to the market price. That is about 2 times price to book value. So they're actually paying a good price for Lakshmi Vilas Bank considering the desperate need that they had for acquiring a bank. They're also saying that the promoters are open to trim the shareholding to about 15% to about 20%, that it will come down to post the merger. Macquarie has also put out a detailed note on the same. They're maintaining their outperform rating on the counter with a target price of about 836 rupees a piece. So actually none of the brokerages have actually changed their estimates or the rating post this particular announcement. But they are saying in the note that odds are actually stacked up against the RBI approval, and they're giving a couple of reasons. One being that even though the fact that both Indiabulls Housing Finance and LVB, both of them have people with very good credentials, ex-RBI people on their board, but that did not help them. That did not help Indiabulls Housing Finance even in the past and this time as well. It may not be of much use. The other reason that they're giving is that if Indiabulls Housing Finance was again and again giving the precedence of the 3 transactions that have taken place in the past, transactions or announcement, Bandhan, IndusInd and Capital First. But Macquarie is saying that it's not really an apple-to-apple comparison of these 3 transactions in the past and this one. So they think that RBI approval will be a difficult one. Investec has also put out a note and they are saying that not much upside for Indiabulls from here on, and they're saying the estimates remain unchanged for them. The merged bank is likely to be a weak one because LVB, that is Lakshmi Vilas Bank, has just about 23% CASA ratio. So even though they are going after these CASA deposits, but it's actually a weak number for even Lakshmi Vilas Bank, and they'll have to, do a lot of investments in putting up new branches, etc. Credit Suisse has also put out a note, and they are saying that ROE is actually likely to drop to 10% from current 24% in the first year of merger. So it's not going to be a very profitable one, but they are continuing to stay neutral as of now.
Okay, Shefali, thanks so much for putting that into perspective. Darshan, what about the other stocks in news?
Yeah, so watch out for the HDFC twins. First of all, both of them, HDFC and HDFC Bank, both of them came out with their fourth quarter update. HDFC says that the loan assigned is at almost 2,400 crores versus nil last time around. The income from dividend is up 62% this time around. HDFC Bank came out with the fourth quarter number update. They're saying that the loan growth remains strong at 24%, which was up even on a quarter basis, was up 5%. Deposit growth was up 17% versus 22% in the last quarter. Ratio of loans to deposit moderated to 89%. Morgan Stanley says that the initial update indicates that broadly it's in line and strong trends for the counter. NBCC, there's a change in the CMD. Shiv Das Meenak joins in as the CMD with immediate effect. Anup Kumar Mittal goes out of the company. JK Promoter, the promoter pledged in 4 crore equity shares as a security for a loan. Sagar Cements came out with the March as well as year-end update. March sales were up 7% and year-end sales were up 22%. And Solara Active will be in focus today. CVR Enterprises acquired 3 lakh shares in the company. The seller was Norges Bank.
Okay, we'll watch out for all of these. Thanks a lot for that, Shefali, as well as Darshan. Avinash, HDFC Bank, steady state, strong trends, valuation sustained, you think?
Yeah, I think Neeraj, looking at the loan book number of 24% and the deposit growth of 17%, I think these are very strong headline numbers. And I think, the bank has managed to actually record these numbers despite challenging headwinds, and most importantly has kept asset quality in check, continuously for a long time. So I think clearly we could see good amount of buying even at the current odd levels. I think clearly, despite the fact that the story is known, I think this is a dependable and clearly a portfolio stock which has generated returns in quite a big proportion over the last 2 to 3 years. So I would believe the same story would continue, and these numbers definitely show a lot of confidence in the kind of commentary which we could get post the Q4 numbers.
All right, that's on HDFC Bank. Quarter 4, not bad at all, the update that they have given. Let's talk about NIIT Tech as well, with Balram PE now looking to pick up 30% stake. They'll obviously have to make an open up for 26% stake additionally. But how do you think the valuations have shaped up for this one? And overall, in terms of what's been happening within the mid-cap IT space, I mean, the kind of deals that have been brewing.
No, I think clearly this deal was in the pipeline for a long time, and I think this deal happening at a premium of roughly 3%. I would believe that the next logical conclusion would be possibly the merger of this company with Hexaware, where already Barings holds a majority stake. I would believe that yes, open offer would come in, but I think clearly in terms of the the management continuity and the kind of investment made by Barings, clearly we could see a little amount of more re-rating coming in here. Hopefully, I expect that fourth quarter numbers should be reasonably good, and we could expect a decent commentary going forward.
Okay. Got that. Since we were on the topic of Indiabulls Housing Finance, and it wasn't just Indiabulls Housing Finance that saw a roaring start to last week and then finally ended with the kind of gains it did. The entire, the housing finance pack was really active. Now, whether it be on the back of some, preemption on what's going to happen with Indiabulls Housing Finance, or whether the business itself looking to pick up for them.
No, I think clearly within the housing finance pack, I think clearly liquidity seems to be coming back, and I think in terms of the larger players, I would believe that they would not possibly would be having problems of liquidity and funding going ahead. Overall, I think the housing finance pack definitely would be moving based on selective kind of stocks. Overall, the larger players would benefit more, considering the fact that we could possibly look at a further rate cut in the June policy. And I think clearly housing finance markets stocks have actually corrected from higher levels. So I think probably some amount of accumulation is happening. And clearly to that extent, Indiabulls Housing Finance, maybe a large player like even SDFC, could possibly see a good traction in the coming financial year.
It'll be interesting to see what happens to some of these NBFCs going ahead as well. For now, it almost seems as if the shift to the quality NBFCs has been on an overdrive with the kind of valuations being prescribed to HDFC, to a Bajaj Finance and some of the others. The market cap gains, maybe market share gains have happened in the last 2 quarters, and we'll get to know when the management speak. But just look at the stratospherical valuations, 9.5 times book for Bajaj Finance. That is not cheap. The only thing that I heard a lot of investors over the weekend argue with me, and not really an argument really, I'm no one to say what a stock should trade or shouldn't trade at, but everybody said that, hey, if you always looked at Growth Finance, it traded at 13, 14 times book for a better part of his life. The thing that people miss is that Growth Finance never needed to raise any capital in order to grow how it did. Bajaj Finance in that sense is slightly different, but yep, a quality name, and the shift to quality is just so perceptible right now in the NBFC
and
space.
all of them, in fact, you wouldn't even notice that August 2018 happened to them.
To Bajaj Finance, to HDFC and some of the others.
Like if it would just be a blip and you'll just miss it in the larger scheme of things, because it just has, I think, overtaken those levels that it was at what happened to IL&FS as well.
Certainly. Well, let's wait and watch what happens there. To those pockets too, all of them would be in focus today. However, time to shift focus to technicals. Ruchit Jain, technical analyst at Angel Broking, with us on the show, as is Brijesh Bhatia, head of research at Dealmoney Securities. Gentlemen, both of you, good morning. Thanks for joining in. Ruchit, what's the approach to trade today? Are you initiating any trades on the Nifty or the Nifty Bank?
Yeah, hi, very good morning, Neeraj. Yes, we have been forming this high top, high bottom structure on the Nifty chart, and as of now, there are no signs of reversal. During early last week, there was some negative divergence with RSI, which led to this corrective of 2 days from the highs of around 11,760 to 11,550. But if we look at the hourly chart, then the overbought momentum readings are now trading in a comfortable zone, and I think if this high top, high bottom structure continues, then we would again see higher levels and a new all-time high in the Nifty in this week itself. So we are advising our clients to take a buy on dips approach. 11,550 is a very strong support. If you consider the hourly chart, then the recent correction, which was in the month of in the mid March, that took support around its hourly 89 EMA, and the index resumed its uptrend from that. So similarly, the last week's low of around 11,560 is the 89 EMA on the hourly chart. So we are expecting the resumption of the uptrend from here on in this week. So if we get minor dips in this around 11,650 to 11,600, look to create buy positions in this. These are Nifty spot levels, so one can accordingly trade in the futures. So look to buy Nifty on dips in the range of 11,650 to 11,600, keeping stop loss below 11,550. We expect Nifty to hit all-time high again and hit targets around 11,800 very soon.
All right. Brijesh, is your commentary on similar lines? Do you expect all-time record highs for the index sustainable this time? Last time we just had a touch and go, and we didn't see that number come back again.
Yeah, morning Devina. I am too expecting a good upside momentum. So if you look at the consolidation of last week, where we have seen some whipsaw coming between 11,600, 11,730 moves. So there are multiple bullish pattern forming. First is the bullish white swan, which is the harmonic pattern. And if you look at the recent momentum on Friday session, we have breaking out of the bullish head and shoulder pattern on hourly charts. So it's clearly indicating that the consolidation has been giving a bullish breakout on the upside now. And even if you look at the MACD on the hourly chart, it is giving a positive crossover below the integer line. So I think there is a good upside still left, and one can go long at the opening as well. So if you look at the Friday's closing, it was around 11,666. One can buy it open, keeping a stop loss of 11,595. So if you look at the lows of a Friday session, it was around 608, 609. So I'm slightly keeping below the stop loss of 11,600 and expecting the target of around 11,780 to 11,844 on the upside.
Okay, that's on the indices. Let's talk about specific stocks then. Brijesh, I'll stay with you. A buy on Tata Steel and a buy on Adani Ports.
So if you look at the Tata Steel first, most importantly, it is closing above the 200 days average for the first time in 2019. Last it was above the 200 days average was in November 2018. So a good bullish sign. Plus, if you look at the range, which was holding for quite some time, between 528 to 542, and a weekly close above those is a strong sign that stock is trending on a bullish side. Plus, we have seen a good volumes coming up in the last Friday session. So I think it's being in a range breakout about 200 days average. One can accumulate it around 549 to 545 on the downside, keeping a target of around 598 on the upside, with a stop loss of 526, which was the last week low. This is slightly for 5 to 7 trading days strategy. Second is Adani Ports. The stock is has a strong comeback from around 330, 340 to now 380. Previous resistance was around 372, which has managed to close above those resistance line. So initiating a long around 385, 387 with the stop loss of 378 on the downside, and expecting target of 405.
All right. We seem to have frozen there. We'll try and get that line patch back with Brijesh Bhatia, but I think he's back. Brijesh, please continue your call on Adani Ports.
One should initiate long at around 385, 387. Stop loss will be 378 and target would be 405 on the upside.
Okay. Ruchit, Ultratech Cement and Engineers India.
So firstly, if we see last 1 month, then most of the cement names have witnessed very good volumes. Increasing volumes along with rise in the stock prices indicates formation of good long positions. Ultratech Cement, specifically after the correction that we had seen in the month of September of 2018, there have been 2 or 3 instances where prices gave a pullback towards 4140, 4150, and again they corrected from those levels. Now on Friday's trading session, we have seen a comfortable closing above that resistance of 4150, and in last couple of days the volumes have also been quite good in this on this breakout. So we are expecting continuation of this uptrend that we have been witnessing in the cement space in last few weeks. Ultratech Cement can be bought at current levels with stop below 4065, expecting short-term target around 4440. And Engineers India, this is one stock which has given a closing above its 200-day moving average almost after 9 or 10 months. And in the last 1.5 months, when prices have been going up or pullback moves have been supported by increasing volumes, whereas corrections are on back of lower volumes. Secondly, also if we see the RSI, then after a long period of time, RSI on corrections is taking support near 50 and again showing a bounce back, which is a positive sign. So traders can look to go long on Engineers India with stop below 115, expecting target somewhere in the range of 127 to 130.
Okay, watch out for those ideas as well. Those are a couple of stocks that one needs to watch out for in the session today. 2 stock ideas from Ruchit and 2 stock ideas from Brijesh. We spoke about NIIT Tech and what bearing PE could do with that whole thing. I'm just wondering, Avinash, if this Midcap IT space, which is flush now with deal making being the order of the day, and not just for the tiny toons, but for mid-size IT companies which are valued northwards of 16, 17 times, would these be the benchmarks that people would now start attributing in terms of valuations to mid-cap IT companies? Because a lot of good mid-cap IT companies are trading cheaper than that. Persistent, I think it's 14 times or 13 times or thereabouts. Would you believe that there could be a leg up that could come in terms of P multiples to some of the others which have not been, for now, bought over or otherwise?
I think there could be definitely be a lot of interest in good quality names, as you mentioned, like Persistent, or maybe even a small focused product player like Majesco. I would believe, Neeraj, this week is going to be a week where you're going to see frontline companies like TCS, Infosys posting quarterly numbers. So I think the focus would be on how these companies put up the numbers. I think clearly if the headwinds clearly show some sort of improvement in the overall margin picture and the top line picture and the visibility front, then I think you're going to see a lot of action getting percolated to the smaller names, and deals have definitely started moving up in the smaller companies. So I think within that, something like maybe a Majesco could be a good fit. It's an insurance product player, has a large market in the US, and I think clearly this could be a stock which could possibly be interesting.
What about Emphasis? I mean, Emphasis is Blackstone. It has Blackstone's client pipeline. I mean, if that's obviously something that they can tap into, but it's been off the radar for some time now. It had a buyback at a heady price. Didn't probably come back to those prices. Now at 975, 1350, or I think was its buyback price.
I think within a year, possibility of any fresh deal win is not possible. But looking at the overall operational numbers, I think Emphasis has been one of those companies. If you compare it to a Persistent or maybe some other smaller player like even a KPIT, I would believe that the markets have not been very happy with the kind of overall operational beat on both the margin as well as on the top line front. And to a large extent, earlier they were dependent on HP. I would believe that the markets possibly are looking at possibly some market share beyond HP. Clearly, I think, more quality names like maybe a Persistent or maybe a Majesco or even frontline companies like a HCL Tech or a TCS. I think these are companies which clearly, could see a much better kind of risk reward.
Okay, I just want to quickly go across to technical experts. Big movers in Friday's session, and it looked like the sugar pack once again got very active. You had Sri Lanka, which was up 13.5%, Bajaj Hindustan, which was up 11.5%. Smaller names in terms of the price points, but big activity last Friday. Dewan Housing Finance was also up about 10%. Ruchit, you want to come in on sugar, and then I'll go to Brijesh with Dewan Housing Finance.
So the broader trend for sugar stocks still continues to remain positive, although we have seen a consolidation phase in last 1.5 months. But this entire consolidation just seemed to be a time-wise correction within an uptrend, and we have now resumed its the positive momentum in Friday's session. Two stocks that that have shown outperformance in the recent past as well from this space are Balrampur Chini and Dhampur Sugar. And the kind of volumes flows that we usually see in these stocks when there is a trended up move in the sugar stocks, I think this outperformance should continue. So Balrampur Chini with a stop loss below 135 looks good for target projections around 160, and even Dhampur Sugar after this consolidation phase seems to be given a breakout from this consolidation. So Dhampur Sugar could be bought with stop loss below 219, expecting target somewhere around 255 to 260.
Brijesh, Dewan Housing Finance.
I think stock has shown a strong comeback. So if you look at the weekly charts, they fall from around 205 to the 202, which was the strongest volume of the whole fall. So I think that level around 195, 198 could be expected on the stock. Once it closing about 205, it would be a big trend changer. But for this momentum, one can accumulate it on dips to around 155. I'm expecting slight dip to come on the stock, keeping a stop loss of 140 and expect around 195, 198 on the upside.
Brijesh, Indiabulls Housing Finance, if it were to come off today a little bit, what would you do?
Yeah, I would go long. I would initiate long around 865, 872 levels, keeping a strict stop loss of 835, expecting back to around 4 digits price on this stock.
The other one, and we'll talk about that, Ultratech, in just moments from now. I think there is a strong brokerage note, but cement just looks very, very active. So that's the other pocket to monitor. We'll talk about Ultratech in a bit. We're very close to market open, so we'll save this conversation for post-market open. But do watch out for the cement names as well in the session today. Ruchit, the other company or the other set of stocks which have done remarkably well are the real estate players, and Godrej Properties stands out there, 976 at the end of Friday's trade. On a closing basis, this would be fresh life highs for the stock. How much more upside here?
So the existing long position should be held on. Usually whenever the stock trades at its all-time high, we know technically target projections can be taken out by reciprocal retracement theory, and that is giving us short-term target projections around 1050, and if the trend continues, then even towards 1200 from a medium-term perspective. So at least from a trading perspective, 1050 could be seen in Godrej Properties in very short term. Neeraj, other name from this space I think which offers a good risk-reward ratio for creating fresh long positions is Shobha Developers. The stock had given a breakout in the last week of March, but during this last week we had seen some retracement, and the prices are trading quite close to its support level. So I think if the real estate space shows some good momentum from current levels, then Shobha could give a good risk reward ratio with stop loss below 472, expecting target somewhere around 560 to 570.
The other pocket I wonder whether or not there is merit is Telecom and Vodafone Idea. I think there were a couple of notes which suggested that there could be decent numbers posted for the first time in many years by both the telcos, not Jio notwithstanding the other two telcos, and whether or not the pain is in the price. Now, two things that will happen with Vodafone Idea, Avinash, and whether or not there is a tactical trade stroke investment out here, money that comes in because of the rights issue, some bit of deleveraging that happens, whether that is enough or no, and the fact that because of the steady ARPUs now, there might be some decent reportage on the EBITDA front for both Bharti and Vodafone Idea. Do you believe in that theory, and therefore is Vodafone Idea a tactical buy?
See, I think clearly, Neeraj, the pressure on ARPUs definitely has reduced considerably, and I think this rights issue definitely would help Vodafone to actually de-leverage the balance sheet to a little extent, if not a large extent. But I think clearly the price at this point of time discounts possibly the worst performance, and I don't think any further downside could be possible. Possibly, if we see even a stronger operational EBITDA beat in Q4, that would definitely be a pleasant surprise, because the markets are expecting ARPUs to stabilize, and this is definitely going to get reflected in better EBITDA margins. But I think overall, somebody who's got a 1.5 to 2 year kind of horizon could definitely look at this stock, because primarily they have a large customer base, and most importantly with this funding, to a large extent, I think the losses could get minimized.
Okay, that's for the telecom pocket. 1 minute left to go for market pre-open. It's going to be an interesting move that we're going to be watching out. Remember, IT, the index itself was up about 1.2% in Friday's session. But nonetheless, last week, despite currency strengthening, you have seen most of the IT names putting up a good show, particularly the larger names that have been doing okay for themselves. Ahead of numbers, whether or not there is a trade opportunity for the larger names like Infi, TCS, we'll get to that in a bit. I think 30 seconds are left to go for market pre-open, so we'll just keep it at that. And there's no major cue that is coming out from the rest of Asia, at least. SGX is still more muted, marginally in the red, just about 6 points under. The rest of Asia, Japan is trading lower as well. That too, 18 odd points, no big shakes out there. Shanghai and Hang Seng, the two markets are up about 0.5% apiece. That's China and Hong Kong. So mixed bag this morning. Market pre-open, Nifty marginally higher, flat open actually. Sensex is opened higher by about 0.5% plus. And we're taking a look at what's happening on individual stocks right now. So Titan comes up at the top of the list. Along with that, you've got Britannia, which comes back after seeing a dip last week of closer to about 2.5%. The weekly performance of Britannia was particularly not very encouraging. HCL Tech 1.5% higher. That's past its buyback price of 1100. Cipla is up 1.25. Z is up to 1.8%. And this is going to be an interesting one to watch out for. 419 for Z. Bharti Infratel, Hero MotoCorp 1% higher, Kotak Mahindra Bank, Infosys, ONGC, but nowhere in the top 10 is in Indiabulls Housing Finance. We're probably going to see that somewhere down the line. L&T, that's up 0.5%. HDFC Bank, Indiabulls Housing Finance, just 1/3% higher at 906. Tata Motors moves up 0.5% too. Losers then, a handful, 5 stocks. BPCL is down 1/3. Remember, we've been seeing crude oil prices move up pretty sharply. Brent crude now, I think, above $70 per barrel. Tech Mahindra, Maruti and Titan are some of your losers. Rupee, 69.39, so some amount of weakness that's crept into the currency this morning. Friday session shut shop at 69.22. Open has been slightly soft.
The bond yields, very quickly, since we're on the topic of the money markets, before we move to 2 or 3 stocks that we should monitor, 7.35, so no great change there. Lakshmi Vilas Bank and then the other small size banks, let's see if they're active. Pre-open rates are too early to discuss, but LVB up 5%. The merger ratio stacked in favor of Lakshmi Vilas Bank. So right now the market will go with the news at hand, and therefore LVB sees some upside. Let's see if this lasts. Karnataka, South Indian Bank, Federal Bank, etc. Let's see if they are reacting at all or no. And then NIIT and NIIT Tech, the other 2 names that you should monitor, and let's see if they are reacting in this early morning trade. Too soon to call. For now, NIIT looks like it will start off on a positive note. We'll discuss some other stocks in a bit. Let the rates stabilize. For now, get in Somit Sarkaru Johnson with the top brokerage calls for the morning. Good morning, Somit.
On the big brokerage calls for the day, first we have is JP Morgan on Biocon, where they have initiated coverage on the stock with an overweight rating and a target price of 775. Now the brokerage is expecting the earnings visibility for biosimilars to improve. Now the existing products and the new launches are expected to help Biocon achieve a $250 million revenue from the biological segment by FY21. Now this also implies a higher margin for the company going forward because of this biosimilar segment, says the brokerage. Along with this, Biocon's sticky emerging market business and a deep pipeline, differentiates itself from the peers, says the brokerage. Lastly, the brokerage says that the valuations don't factor in the full upside potential of the biosimilar pipeline of the company. It also says that over the next few years, monetization of its pipeline will contribute the most to its EPS growth and will be the key driver for the stock price of Biocon. The second we have is on Ultratech, where CLSA has upgraded the counter to buy from an outperform rating and has also hiked the target price to 5,025 rupees from 4,500 earlier. Now the brokerage has upgraded its rating on the stock on better cement pricing, which has in turn improved the outlook for the company. Along with this, a stable cost would also drive a strong unit EBITDA for Ultratech, says the brokerage. Now the brokerage is expecting Ultratech's EPS to grow at a compounded annual growth rate of 44% over FY19 to FY21. Lastly, the only concern for Ultratech is its debt and leverage, to which the brokerage says that it is not as bad in a rising price environment, as profitability improvement, better cash flow and minimal capital expenditure requirements of the company should lead to a lower debt going forward.
Okay, watch out for these. Thanks a lot for that, Somit. Those are a couple of interesting brokerage notes. Avinash, we want to talk about Ultratech Cement as well. The brokerage note very bullish. Are you sanguine about the prospects of Ultratech? If not Ultratech, any other cement name that you're bullish on?
No, I think cement companies, Neeraj, should show pretty strong numbers in Q4, considering the fact that a large part of Q3 was without any price increase, but Q4 should be much better. I think within the South companies, we still continue to be positive on Ramco Cements. Our sense is that we could see a sustained rise in profitability in the southern cement manufacturers, and Ramco Cements definitely could see a decent kind of earnings as well as a top line push in Q4. So clearly, Ultratech has a geographical advantage, a large capacity, so we could see a decent improvement in the EBITDA margins and the overall absolute EBITDA and the bottom line. But clearly, in case of Ultratech, the debt position is pretty large. So I think one would have to see how the debt gets reduced over the next, say, 1 to 2 years. Clearly, acquisitions have come at a decent debt cost. So these things are definitely going to impact the earnings growth. But yes, overall long-term prospects seem to be quite good.
We'll leave it at that. Avinash, thanks so much for taking the time out and being with us today. I appreciate your time. That's Avinash Gorakshakar with his views on almost everything that we wanted to ask him about. So good to have that conversation with him. Just before we get in, one more fundamental voice, just looking at the pre-open rates and the way they have started off, NIIT, and let's just revisit that rate once to see what it is doing now. So, well, settling down a bit, but still looks like being active, 10% higher. It gets a pot of cash as a result of this deal, which is a done deal, and therefore NIIT looks like starting off on a positive note. The likes of Vodafone Idea, some of the Southways banks and some of the sugar names seem to be doing well for themselves too. Deepak Jasani, Head of Retail Research at HDFC Securities, joins us right now on the show. Deepak, good having you. Thanks much for taking the time out. What was the conversation today with regards to Indiabulls Housing Finance and Lakshmi Vilas Bank, Deepak? The ratios seem to suggest that LVB should benefit, but are you guys giving a larger call to your clients on what to do with both of these names?
Good morning. Incidentally, we don't have coverage on either of the stocks. So in that sense, we don't have a direct recommendation on this swap. Now, looking at it independently or at a distance, I think the proposed swap ratio obviously benefits LVB. So even if Indiabulls Housing Finance does not rise from here, LVB has a lot of scope to rise based on just the swap ratio. Now, whether this merger will pass the regulatory approval stage one after the other, including the RBI, now that is the uncertainty that we will have. So probably after rising for a couple of sessions, I think the discount of the merging company may be a little more than the normal discount that we see over the exchanges.
Okay. That's on Lakshmi Vilas Bank and Indiabulls Housing. Anything else that stood out in your conversations, early morning conversations, Deepak, with regards to any particular stock or any particular space that's of interest right now?
So now, basically, NIIT Technologies has been in the news. So I think this was expected. The price is also along expected lines. So in that sense, not much fireworks on the stock price expected at this point of time. If at all, Some people who would have bought in anticipation of this announcement would come in to take profits.
Okay. Let's take a call on, whether or not if the stock does open 10% higher, whether a trading position would be prudent to get in 10% higher. Ruchit?
Certainly, it would be very difficult to keep any stop loss once it opens 10% higher because if you look in terms of support, then the support is somewhere pledged around 85, 87. So I don't think one should take any bet to buy 10% higher from current levels. Yes, in case if post opening, if any dips comes from around 100 rupees or so, then one can take a risk to buy with stop loss somewhere below 90 or 89 rupees.
Watch out, 11.5% higher for NIIT, 106 and counting. Let's see where it lands in the session today. As we said, the south-based banks or the small-sized banks are certainly doing well. Lakshmi Vilas, of course, on news, but South Indian, Karur Vysya Bank, Karnataka Bank, all of them in focus. Brijesh, would you trade any of these?
Yeah, I would trade KTK Bank, Karnataka Bank. Because if you look at the stock has been in a strong up move, surpassing the previous resistance 130, 135. So one can initiate at long at around 140, keeping a target of 147 on the upside, and stop loss will be 136 for the momentum.
Okay. That is a Karnataka bank. So let's take a look at now, once we've got the pre-open prices a bit more settled, Vedanta now stands tall, 1.25% higher on the index. That's the top gainer. Following that is JSW Steel, Power Grid follows suit as well. Metals is a pocket now. Most of the people that we've been speaking to have said that this time around for Q4 in terms of the results, you actually might see a turnaround for metal companies to showcase themselves in terms of good earnings performances. Deepak, quick word on metals?
Now, metal companies have sort of benefited lately due to the global slowdown fears now receding for the time being. Whether it is China or even Germany for that matter, industrial output numbers for February have come out in the positive. US also looking good. So there is some sort of temporary, probably we'll call it temporary so far, reduction in the slowdown fears. So whenever that happens, I think metal stocks tend to do well, and they could do well some more from here on.
Okay. We'll ask which metal stock is a favorite of Deepak in moments from now. Since we have minutes away from market open, let's tell you all that you need to know to stay ahead in trade today. First up, the board of Lakshmi Vilas Bank has approved the merger with mortgage lender Indiabulls Housing Finance. Shareholders of LVB will get 14 shares of Indiabulls Housing Finance for 100 shares held. But remember, the merger is yet to get a green signal from the Reserve Bank of India.
Another big M&A news. Baring Private Equity Asia is set to acquire 30% stake in NIIT Tech. The private equity firm will acquire the stake from NIIT Limited and other promoter entities at 1,394 rupees per share. Baring also is ready to make an open offer for an additional 26% stake.
In Q4 earnings updates, HDFC Bank indicates loan growth of 24% year-on-year. The bank has also said that CASA ratio remains stable at 13%. Morgan Stanley says these initial updates are in line and that trends seem to be strong.
JK Tyre promoter pledges 16.2% equity as security for loan.
Lastly, key brokerage calls include CLSA's upgrade on Ultratech to a buy. They've hiked the target price to 5,025 rupees per share. The upgrade comes on the back of a better outlook on cement prices. Deepak, Jasani, what's been your house stance on the cement players, and is there a favorite?
Yeah, cement, we have been sort of positive for the last month or so. The prices are rising. And mind well, we have never been bearish on cement, despite a lot of brokerages being bearish due to the valuation fears. But over the last month or so, we have started getting positive. Cement prices have risen across the country, more so in the south and central India. And this situation could continue for some more time. Till the elections are out, maybe there could be some slowdown in the capital spending. But once the new government is in, I think the infra space will see a resumption of spending, and the real estate projects also could sort of regain momentum. Now, cement has this typical trigger of not many limestone miles available across the country, and the transportation costs are huge. So in that sense, I think it is a structural story with some intermediate periods where the prices may soften due to temporary issues, but otherwise I think it's a structural bull story in India.
As the pre-open rates, as the market gets ready to kickstart, Devina, Indiabulls Housing Finance starts off 2.5% lower. Looks like starting off 2.5% lower, and this may not be the end of it. It's run up so much that there was some bit of profit booking NHS that would come out of the news, and the fact that the merger ratio is adverse, with an assumption that all goes through as planned right now.
The chatter is really not positive. That positive from brokerages as well. You know, with the kind of conversation around whether this bank is a positive for them or no, because the deposit base is not all that big.
Yeah. So all of that put together, 2.5% lower, starts off as, or likely to start off as a top loser on the indices. Ruchit, quick 20-second call. Indiabulls Housing Finance. We are very close to market open.
So I think wait for some sort of dip in the stock. Last week's high marks around 200-day moving average. So one can assume 820, 825 could be tested in next few trading sessions.
Okay. Let's take those top calls then. I'll start off with you, Brijesh Bhatia. Top call for the morning.
Yeah, apart from Tata Steel and Adani Ports we discussed, I would initiate fresh long on HDFC as well at current level. So it was closed at around 2060. Initiate long at with a stop loss of 2040 for momentum. Target would be around 2100. But if you want to look for 6 months view, 2300 could be on cards for HDFC.
Which Jain?
I would stay with Ultratech Cement, which has given a clear breakout in Friday session. So one can go long at current levels from trading perspective, keeping stop below 4065, expecting targets around 4440.
Stay on, gentlemen. So much more to talk about. We'll come back and talk about some more charts and market open as well. But the market's slated to kickstart trade on a slightly positive note, more positive than what the SGX was indicating, about 1/3%. Let's see if we build on from there or no. Watch out for the stocks in news though. Maybe, just maybe, the index is a non-event this morning. There's a lot of stocks in news. But about 1/3% higher. In fact, the Nifty Bank about 0.4% higher. The mid caps and the small caps should come up on your screen. The start is not bad at all, I must say. About 1/3% for each of the benchmark indices. Let's get the heat map straight away because a lot of stocks in news and we want to focus on individual stocks today. A lot of green, very little red. OMCs, because crude prices on a 5-month high, so they are inactive or they are down, and Indiabulls Housing Finance is the top drag, 3.5% lower. This is again on expected lines. Safely say we told you so, but not saying that. So essentially these are the losers. What about the gainers? Vedanta, Tata Steel, JSW Steel, so metals on a good note. We were talking to Deepak about that. Bharti Airtel about 1.25%. Ultratech on that brokerage note, likely about 1% higher. Z finds some semblance of sanity, and HDFC Bank about 0.5%. But that aside, not too much in terms of gainers, but for the fact that metals have done well, OMCs haven't done well, and Indiabulls Housing Finance remains the top drag on the index. Quickly, 2 or 3 pockets that I want to highlight. Actually, first, speaking of Indiabulls, what's happened to some of the other Indiabulls Group stocks? That's something that we need to monitor. Indiabulls Integrated Services up about 5%. If the market believes that this deal should go through, it's positive. Bank assurance is a great play for insurance companies. Indiabulls Integrated Services in that business, so should augur well. Not so much for Indiabulls Consumer Finance. Indiabulls Ventures down about 1%. Some other stocks which were in focus the whole of last week, and we should pull those up. These were all stocks which are very, very active in the session last week. Godrej Properties, Balram Chini and Vodafone Idea, at least on Friday, was active. In today's session too, starts off about 3.5% higher. Dina, what about the other key stocks in news?
Well, since you already mentioned Indiabulls Housing Finance, the group stocks, the other side of the coin being the smaller banks. Lakshmi Vilas Bank, obviously, being the one that we're going to be watching out for. Pre-open session was strong. Opening too is equally strong, so about 5% for Lakshmi Vilas Bank. The other smaller banks, South Indian Bank also follows suit, closer to 5% higher. Karnataka Bank, that's up about 3%. Crore Vaisya Bank, that's up about 2.8%. So that's going to be interesting. NIIT Tech, NIIT Limited, both these names on the back of the deal with the bearing PE. NIIT Tech is down 1%. NIIT from pre-open carries forward the gains, closer to 10% higher for NIIT Limited. That's at 105 right now. Other gains, Bajaj Hindustan, that's up about 6%. Friday session was up closer to 11 or 12%. You've got Ori and Cement. Swings quite strongly last week. So you've got 2 or 3 days where it had big gains coming in there, then it lost some steam on Thursday's session and now back in focus. Vodafone Idea, we already spoke about that one. Sudarshan Chemicals, that's up about 2.5%. Then you've got the likes of Zensar Tech, that's up about 1.5%. Strain from Muthoot Finance, Godrej Industries, that's up about 1.25%, and Hathway Cables moves up 2 in the session. 827 stocks advance, 355 stocks are losing ground. So the outlook is, and the breath is positive. Reliance Communications continues to fade away. Today's session, yet again, another 5% given up. Balrampur Chini profit taking 6% in Friday's session. Today's down 4%. And you've got the likes of a DLF, which is down 2%, and HPCL, since it's not on the index, I'm going to mention it separately, following suit with the rest of the oil marketing stocks.
Yeah, thanks for bringing that up. Actually, quick opening thoughts on that. OMC is the top drag. Brijesh, Bhatia, would you go out and short any of the oil marketing companies?
I would go short on HPCL. So if you look at one of the most underperforming and under pressure stock, was being trading a support at 260, which is broken in the today's session now. So I think at around 259 spot level, one can look for short opportunity, stop loss of 264.5, and I am expecting back to 248 levels on the HPCL.
Okay, that's HPCL. Most of these stocks, and Deepak would like to come to you on this, since we've seen crude oil prices starting to look a little bit more steep right now, around 70. Last entire week to 10 days, HP, BP, IOC have been under pressure. Do you see Q4 results for them continuing to look weak?
No, as a matter of fact, I think Q4 numbers could be quite healthy for all these companies. But the current stock price would typically reflect what is the outlook over the next 1 or 2 quarters. So now, as far as the outlook is concerned, the crude prices are on the rise, and whenever they are on the rise, the oil marketing companies come under pressure on hopes or expectations that they would not be allowed to pass on their entire rise in the crude prices in the form of fuel prices. Now, so far that has not happened. The companies have been passing over the increase in the crude oil prices to the consumers. Rupee has sort of appreciated till 2-3 days back. So that is again some sort of a positive for them. However, refining margins in the region are a bit soft. So that is the negative that we have to consider. But on a longer term basis, I think PSU as a sector and capital goods do well between the announcement of the elections and the election results. So I think at some point whenever crude stabilizes or starts to fall, these stocks also could recover a lot of their falls.
And the associated sectors, if you were to take a look at paints, tires, how is the expectation built around these particular pockets in terms of their Q4 performance, considering that they will have pressures building up if crude oil continues to move higher?
Yeah, but typically the price rise has happened over the last 4 or 6 weeks, and everybody has a lot of inventories of about 1 to 1.5 months or 2 months in some cases. So they would be using up the older inventories. But going forward, yes, paints company could come under pressure, as it is the valuations of these companies are too high. And given the fact that we may have a below normal monsoon, is one more reason why paint companies may come under pressure going forward. Tire companies, again, something similar. A lot depends on natural rubber prices also, and the sentiment towards auto and auto ancillary currently is not so great.
Okay. Getting a quick chart check from both our technical experts. Apollo Tyres for one, and Brijesh, I want to come to you with that one, and a Motherson Sumi as well.
Apollo Tyre, I think it has been trading in a range for quite some time. I think one should let it cross 230 before a big up move. So it has been strongly consolidating, and I think a strong breakout would be initiating a fresh about 231, 232, keeping a target of 255, because if you look at the range, it is around 20 points. So if I would just take a target, it's around 250 to 253 on the upside then.
And Madhasan?
Motherson, see, if I look at the bigger medium-term view, I think it is making a big bottoming formation. So similar bottoming formation we have seen in Yes Bank, a stock being consolidating between 150 and 175 on, for the long time. So I think Motherson Suming going with the same phase. And I think from a 6 month point of view, I'm expecting 220 on the upside. And it's a barely a bet for medium term. I'm not looking for a short-term view on Motherson Suming as of now.
Okay, since we've got Brijesh who mentioned Yes Bank, I actually wanted a fundamental call on Yes Bank from Deepak as well. Deepak, last week we had Bloomberg exclusive talking about how Yes Bank is looking to raise capital of about 500 million. This is going obviously a big overhang that it had earlier on with regards to adding on to the other issues like who's going to come to the helm at the bank, the divergence report. Two of those factors were taken care of. The only factor left was now capital raising, fundraising for the company. Now, if this actually happens, do you think this is going to be an incremental positive for the bank?
Yeah, let me clarify, we don't have a coverage on Yes Bank. But yeah, what you say is right in a sense that one more uncertainty will be out of the way. And going by the way the other private banks have been continuously getting re-rated, and the gap between the valuation of Yes Bank and the other banks, I think there is potential for some catch-up for Yes Bank.
What's your favorite bet on the large private sector banks or the mid-sized private sector banks as well, Deepak? Obviously, you can't talk about HDFC Bank, so we'll leave that out.
Yeah, among the private banks, the large private sector banks, we like corporate banks, Axis as well as ICICI, both of them. We have coverage on them and we like both of them. Basically, on the feeling that the worst on the corporate sector and the NPA is behind them. And there is a lot of scope for them to grow from here. Both of them have their individual reasons in terms of management changes, in terms of strategy changes and such like. And there is a gap in valuation between these companies and the leaders in the private space. So that gap can be gradually filled.
Okay, by the way, Indiabulls real estate is on fire, 11.5% higher. So that's one stock to watch. The other one is Indiabulls Integrated Services, not as liquid, of course. This has 3 million shares. I think that would have very less in terms of volumes, but up about 5% in the session to 364. Indiabulls Ventures, not quite, I mean, no per se, no direct correlation, but you never know, there could be active in the green as well yet again. So do watch out. Save for Indiabulls Housing Finance, almost every other Indiabulls group stock seems to be doing okay. The other interesting movement that we're seeing is in the telcos. Both Vodafone and Bharti Airtel are up and about in the session today. Deepak, Jasani, do you guys have fundamental coverage here? And is there merit in buying either Bharti or Vodafone at the current valuations?
Now, Bharti could be a good stock to gradually accumulate. Going by the fact that the mobile revenue growth is to be seen in this quarter after a long time, probably portends better times going ahead. Now, as far as Vodafone Idea is concerned, I think one should wait till the rights issue closes, because till that time, given the large size of the rights issue, there will continuously be selling pressure on the counter. And once we are closer to the issue close date, then probably one can look at entering that stock again from a gradual accumulation for some re-rating. So Vodafone Idea probably is a high risk, high return bet from those levels, whereas Bharti is some sort of a medium term, medium risk, medium return. So each one his own, I suppose.
Okay. And we'll ask Deepak Jasani about the stock of the week as well. They do some very good research on that. But since we're on the topic of telcos, Ruchit, quick thoughts here. Would you trade a Bharti Airtel?
I think yes, if we see last 3 or 4 weeks, the stock has been trading in a channel and a rising channel, and that rising channel, the higher end of the rising channel has been broken out. So I think some momentum play could be done for target somewhere around 375, 378. So if one is looking to trade it from next 2 to 3 days perspective, then one can go long with stop below 354, expecting target around 378.
And Deepak, since I mentioned that, what's been the coverage on the stock of the week this week? It's Monday, so a good time to get it to our viewers.
Yeah, the pick of the week this time around is Siemens. So basically, Siemens is a 75% subsidiary of Siemens AG. It has got a much diversified revenue stream, and it could be one of the prime beneficiaries of a capex uptick, the private sector as well as PSU, which is expected to happen post-elections. Its financial ratios are great. Its parent is technologically very sound. At 32 times SY20, it is not cheap, but I think there are expensive stocks in this sector. And given the fact that it has been growing gradually over time, now there could be pickup in momentum in terms of earnings. So we have a buy at the current price of 1146 and add-on dips to 1036 to 1046 for sequential targets of 1277 and 1344 over 4 to 6 quarters.
Okay. Want to take a moment to thank both our technical experts, Ruchit as well as Brijesh. Thank you so very much for joining us this morning. Deepak, coming on Z, talks of two big marquee names interested in picking up stake. One has categorically denied it. But nonetheless, with a deal in the offing, do you think there's going to be an additional upside left for investors in Z? And even at a price of 417, it's not a bad bet?
Yeah, so now large companies, when there is a big share offering, either under duress or voluntarily, I think there will be a lot of theories floating around, a lot of suitors. Most of them will not be serious suitors. There will be hardly one or two who are serious about the acquisition. Most of the others would like to have a look in terms of due diligence and see whether there is any synergies between the two. In the meanwhile, I think as long as the Z promoters' other responsibilities or other liabilities are not too large and they are able to manage them, the stock price may not see a big fall from here, but at the same time, the franchise is valuable, and at some point, I think it will be sold to a global company, and at that point, we could see some fireworks in the stock price. From what level is a question mark, whether it first falls 50 or 100 rupees from here, and from there we see fireworks, or whether it will happen from somewhere around the year is a question.
All right, Deepak, we leave it at that. Thank you so very much for joining us this morning. Appreciate it.
My pleasure.
Staying focused with the biggest news at hand and what's going to happen to Indiabulls Housing Finance and Lakshmi Vilas Bank. Joining us right now is Siddharth Purohit of SMC Institutional Equities. He's here with us on the phone line. Siddharth, good morning to you. Obviously, big news and not getting a banking license in 2013. Another attempt catching the year the other way around via Lakshmi Vilas Bank. What's the sense in terms of how this deal has actually happened, the share swap ratio, the valuations? Put it into perspective for us.
Yeah, good morning. So in fact, the deal is certainly a very positive outcome for the shareholders of Lakshmi Vilas Bank. If you look at the Friday's closing price, then the Lakshmi Vilas Bank has been valued at roughly 36% premium to its closing. Now, looking at it from the bank's perspective, LBB was kind of struggling for capital. They had raised capital recently, but then also they were below the regulatory norms. So anyway, they were in need of capital. Now, on the other hand, Indiabulls Housing had previously tried getting banking license, but as we know, the RBI had allowed only 2 banks that time. And since then, in the last 5 years, Indiabulls Housing has also scaled up quite significantly in terms of balance sheet. And this is probably the right time that, they get into the banking business. The amalgamation is certainly kind of win-win situation for both Lakshmi Vilas Bank shareholder as well as for Indiabulls, because beyond a point, certainly Indiabulls also could have faced kind of issues in terms of growing. But now that they will have the access to the bank, certainly they will get the cost of fund advantage and obviously a lot of renewed network. So positive from Indiabulls housing point of view also, but certainly why market has not reacted so positively is because of the premium that they have paid compared to normally the historical transactions that we have seen. So, but overall, I believe that now the key hangover would be the approval that needs to be seen from RBI, because as we know, Indiabulls had earlier also tried and didn't get license, and they also have operations in other areas. But looking at it from the synergy point of view, I believe that LBB is in need of money, and Indiabulls can provide that money. The merged entity will look much stronger. So RBI could probably will not raise much issue, and should the transaction should get clearance. That is what my view is.
Siddharth, you said the merged entity will look stronger, but that is precisely the concerns that some of the other brokerages have been highlighting, that the merged entity, may not be all that big, because the one obviously being Lakshmi Vilas Bank's deposits, which are not that high. Two, the cost of funds for Indiabulls Housing Finance, though it will come off, it will just be a short-term kicker for Indiabulls Housing Finance. And whether or not there would have been a better fit in the entire process. Some other better fit.
See, there are definitely many more candidates which we now and then hear about getting merged with NBFCs or with other banks, the south-based banks where there is no major promoters. But here the issue is Lakshmi Vilas Bank was in need of money, and it was not that Indiabulls only was looking for a candidate to buy out, but on the other hand, Lakshmi Vilas Bank also wasn't looking for money. So that is why it was a good fit. Somebody who was looking for money and somebody who has good amount of capital to provide. So the merged entity solves the issue both for the bank and for the NBFC, which intends to grow. So while there might be argument that there are better candidates at better valuations, but whether they were ready to get merged with some NBFC was a question. Here, for LBB's point of view, either they had to raise further money after the QIP of 460 crores, or they had no more options other than getting merged, because substantial amount of money was required even after the QIP was done recently. So I think for them it was good to get merged with somebody else which is having decent financial strength. So certainly the premium paid is very high, and there could have been better options, but certainly there should have been assets available to buy out for Indiabulls, and this was something which was available. So I think given the current options, it is the right fit to Indiabulls, I believe.
Yeah, marriage of convenience as well, but as Siddharth said, let's see if it sees the light of the day or no, at the end of the day or no. Siddharth, thanks so much for agreeing on such a short notice to speak to us at Bloomberg Quint. Appreciate your time.
Thanks.
That's the view from Siddharth Purohit of SMC Equities. On to more news before we get back to our conversations. Jet Airways lenders have called for bids from interested parties, to acquire 75% stake in the airline, and there are at least 5 parties who are contemplating on bidding for the airline. The assessment is in early stages though, and they may well choose to sit out eventually. But it's important to get a list of this news. Vishal Nair is here with the details. Vishy, what are you learning?
What we understand now, Neeraj, is that KKR, Blackstone, TPG Capital, these are the PE firms who are currently looking at the opportunity that is available at Jet Airways. They've reached out to consultants. Apart from them, some of the more strategic players such as Lufthansa Airlines, Swiss International, as well as Singapore Airlines are also reaching out to consultants. Remember that this reaching out to consultants is only the first part of the process. Once they finalize who will do the due diligence for them, these consultants will perform the activity. They will study Jet Airways' books and then submit a report depending on their findings. And once these investors have seen these reports. After that, they will decide whether they want to continue with the sale process or not. Again, State Bank of India has, as you said rightly, they have called for expressions of interest that will be collected between today and the 10th of April, this day after tomorrow. And once that is completed, then they will have a fair list of people who might be interested in Jet Airways. Again, after that, there's a due diligence process. After that, there is going to be a final binding offer that is submitted by any interested bidder. And only after that will the sale process go ahead. Remember, there's still a long way to go, but it is crucial that this process happens quickly, because for Jet Airways, they've already seen a number of their planes being grounded, a little over 10,000 crore worth of debt that needs to be paid to multiple parties. Lessors have not received payments. Their employees have not received the balance of their salaries. The 1,500 crore debt support that the lenders had originally promised, that has not yet been transferred, is what we're learning from our sources. But depending on the success of this sale process, they will actually decide to, how exactly they want to, the lenders want to deal with the case, and whether insolvency is on the table or not. All of these decisions will be taken in the next few weeks. But for now, we understand that these are the 6 people, 3 strategic players and 3 financial investors who are looking at Jet Airways as an opportunity.
All right, Rishi, thanks a lot for bringing that to us. That's an exclusive there, a BQ exclusive. We're picking up from sources the kind of names, the potential bidders for the stake of Jet. The market's absolutely flat. The Nifty 50 not doing a whole lot much, and neither is the Nifty Bank. Everything is lying absolutely flat. We're going to take a very short break, but on the other side of this break, we have 2 agriculture sector companies joining us. We talked to Sandeep Aggarwal of Insecticides India and Balram Yadav of Godrej Agrovet about the risks from a below normal monsoon.
What is the meaning of this word suspense? Suspense is something very intangible. Say we show somebody getting killed. For me, I'm not interested in a whodunit. The moment the audience knows that this person has done it, and he has to ensure that he doesn't get caught, there is a certain tension in that. I try to give away as much as possible to the audience and still keep enough aces up your sleeve. I don't think any director would be able to say, okay, this is my style. I don't think I can define it.
Watch his exceptional story, Pursuits by Skoda, only on Bloomberg Quint.
This is a show which gets you a complete wrap of all the stocks that are buzzing in trade.
Everyone's a price taker, not a price maker out here.
There are better opportunities in the marketplace.
The return ratios will improve, margins will improve. What are you seeing? Valuations are extremely expensive.
It would take 100 years of profits to really pay off the entire debt.
Not all good businesses are good investments.
Good return on equity could be expected.
And I think that will sustain.
Their numbers, etc., were pretty sluggish.
How much longer they can sustain, I'm not too sure.
It has never been the scenario in any of the stocks.
It's an avoid for him at this point of time.
I wouldn't write it off in such a hurry.
We're getting into more complex chemistry.
Join me as I navigate the hottest stocks and help you pick the right stock at the right time.
Welcome back. You're watching Indian Open. A relatively bad Rabi season and a gloomy monsoon forecast. It's not a pretty picture for agri-based companies in India. Not that the monsoons was very good last year. And lower food prices means farmers also have little cushion to bear out these hardships. So today, both our discussions are focused on the agri distress. Let's first start off with Sandeep Aggarwal, the CFO of Insecticides India. Mr. Aggarwal, thanks very much for taking out the time. Is it a big worry that the SkyMet has forecast monsoons below normal at 93%?
Yeah, whatever forecast for monsoon has been done, it has been done on the basis of average monsoons. But what will happen is, if it depends basically more on the distribution and time of monsoons. If time of monsoon is good and the distribution is good, then average monsoon doesn't matter much.
Okay, so it's not a big worry, but just the fact that, last quarter around, it was the extended Kharif season that positively impacted volumes. This time around, we're expecting the Rabi season not to be as great. Would you see that having a bigger bearing on volumes for you, sir?
No, I don't think so, because even in the last quarter, we are hoping there should be a single-digit growth in the industry also.
What would that number be? Single-digit growth in the sense?
Maybe around 8 to 9%.
Okay. Nonetheless, you've had a strong showing in the previous quarter. Expectations are that this quarter around as well you'll be able to maintain what you had clocked in last quarter onwards. I just want to talk a little bit more about your product mix, because according to most brokerage reports, the upper hand remains in your product mix, and you had about 7 new launches up until 2019, early 2019, and you've got more in the pipeline. Can you talk about how you are expanding the product mix?
Practically, to improve your baseline to bottom line, to improve your bottom line, we have to come out with a newer chemistry. Now we are working on the newer products which are more towards the green chemistry. So we are expecting a launch of 7-8 products in the coming year also, and whatever 6-7 products we had already launched in the last year, and these new launches and some discontinuation of old product is giving us a better improvement in the bottom line.
The products that you launched, sir, what is the growth potential? Can we safely assume 30 to 40% growth from these products in FY20 going forward, considering in the first 9 months of FY19 they've contributed about 700 million? What is the expectation of the remainder for the year and the next year? What kind of growth figures can we look at?
Basically, whatever these products has been sold in the first 9 months, so there will not be much sale in the last quarter, but definitely in the coming year there will be a growth of around 30% in these launches which we had launched this year.
Okay. You also have a collaboration of products with Nissan. I mean, the expectations were that they will come on board sometime within the year. Is there a timeline that you have, and can you give us some color on the same?
Yes, we are waiting for the registrations now.
Could you just give us a highlight of how much time can we anticipate them to come on board? By when? The launch of these products?
Basically, it depends on the... Yeah, we are waiting for the registration, and we are hopeful that we'll get it by the month of April. We are hoping this.
Okay. Well, let's get in another company in this conversation as well, and that's Godrej Agrovet. Remember, from a fertilizer company to now the largest animal feed manufacturer, Godrej Agrovet has traversed a long way, and it'll be important to get their views as well on the agri stress and what could happen. They also, incidentally, have the crop protection business. Balram Yadav, the managing director of Godrej Agrovet, with us, joining in this discussion. Mr. Yadav, thanks so much for joining in. We'll talk about Godrej Agrovet too, but firstly, a question that we were posing to one more company in this conversation, and that was the agri stress that exists and the impact that could have on different facets. Now, you are spread across 4 or 5 verticals, 2 or 3 of which could get impacted as a result of either lower farm income due to the El Nino impact that could come into the monsoons right now, or just the lower consumer spend that could happen. A lot of companies are talking about down trading too. What's your experience been in the last 3 months, and what do you sense could happen in the next 3?
I would focus on monsoon first, because El Nino is a very important occurrence for India. Out of the last 11 incidents in 20-25 years, El Nino has impacted us badly in 9 out of 11 events. So I feel that will be a very critical thing going forward. Plus, considering that monsoon is very, very critical for India, I expect tough times in future.
Okay, interesting. Can we elaborate a bit on that? I mean, one of the companies which is in the crop protection business, Insecticides India, believes that it may not be a dramatic bearing on that piece of the business. What do you reckon? One, for the crop protection business, and then two, for the other facets of your business as well, the 3 or 4 other businesses that you dwell in, how would they get impacted if indeed we do see El Nino taking shape?
Yeah, so let me deconstruct monsoon for you first.
Sure.
One of the most worrying thing about the recent forecast is a slow start to the monsoon in June and July, which are critical months for sowing. Having said that, I need to tell you that 93% or 91% of normal monsoon is not something we are worried. Last year also we had 91% of normal monsoon, but we still had bumper production of sugar, bumper production of milk and other cereals, etc. So it is not that monsoon deficiency impacts negatively everywhere. What is more important is temporal and spatial distribution. If it rains at the right time, at right place, I don't think we will have major trouble. But only worrying factor I need to repeat is low rainfall in June and July, which are super critical months for sowing. Coming to Agrovet, yes, we will be impacted also because our agrochemical business, oil palm plantation business, etc., are irrigation dependent, and in case sowing does not take place on time, we may be impacted in crop protection business. On the other hand, we have seen whenever there is moisture deficient conditions, animal protein businesses tend to do a little better.
Okay, so when you said that there could be an impact, how much of an impact are you factoring in? Because obviously, while these projections of monsoon being normal or below normal keep changing, but you would have had a certain value that you would have already factored in.
So you're absolutely right, because forecasts are forecast and IMD gets it right more time than anybody else, and I would still wait for IMD forecast, which is due on 18th of April, and they will also factor in Indian Ocean dipole, which also affects El Nino in India. So I'm saying that, that said, I would say that I strongly feel that temporal and spatial distribution is very critical. Going by our historical record, 14 and 15 were drought years, and there we saw about 4 to 5% drop in our sales, particularly in crop protection business. Having said that, did it drop over the previous year? No, it grew less. In those years also we recorded 7-8%, but we have been of late recording about 14-15% growth in our crop protection business. So that definitely will be impacted. I strongly feel that it will be a tough year for milk in case the rains start late, because the flush season of milk starts in July and August, and that is where a lot of fodder requirement is there. And in case there is no rain in June and July, the fodder will be very short in the flush months, and we will see drop in milk production in the country.
We'll get in Mr. Aggarwal in this conversation too in just a minute, but Mr. Yadav, just a follow-up to that point that you mentioned. We were speaking to R.S. Sodhi from Amul about 3 or 4 days ago. He seemed to believe that there is that they are not seeing down trading, but that the customer is opting for smaller sized packets. However, the volumes are not getting impacted, and he believed that the dairy business or the foods business volumes would continue to grow at about anywhere between 11 to 14%. Would you be as confident, or as you said in your previous answer, that milk production and maybe some of the other foods business might stand to get severely impacted either due to monsoons or due to farm distress that might crop up due to whatever reason?
So I agree with him, but I need to Again, tell you something more about milk business. Milk, India produces about 176 million tons of milk, of which about 25-27% is in the organized sector, which will continue to grow as category conversion is happening. What will also grow is value addition. All the value-added products in milk will register growth. But yes, because of paying power reducing a little, the pack size are coming down. So that definitely is happening there. I agree with Mr. Sodhi totally. But will the organized sector in milk grow? The answer is yes. And will value addition in milk grow? The answer is a very big yes.
Okay. What about the the pesticides business? And Mr. Aggarwal, I'm just wondering as to why this dichotomy, because almost everybody else that we spoke to did mention that should there be a monsoon impact or farm distress, then pesticides, insecticides businesses will also stand to get impacted marginally at that. What gives you this confidence that you will be able to do well? Is it that you will do better than the industry, even if the industry goes into a bit of a lull due to the farm distress?
No, I am not saying that. But yes, we had a good product mix. We had product for rainy seasons also. We had product for drought season also. And we are present across India, and that too equally. So I think if monsoon spread would be good, then it will not impact much. But yes, if there will be in some area there will be drought, in some area there will be more rainfall, then if there will not be no sowing, that will definitely impact the whole industry, and that will impact us too also.
Okay. Mr. Yadav, the other various parts of the business, let's talk about palm oil, the animal feed segment, no impact there?
Can I just add to what Mr. Aggarwal said?
Yeah, sure.
That definitely I think India is a large country. But I think the companies can also grow if they bring out new molecules. Because in this sector, all companies launch new molecules which are new solutions. So definitely, I think that also adds to growth of certain companies. So we cannot make sweeping statement that the whole sector will be impacted. Probably the companies which are launching new products may be less impacted than rest of the sector. So that is this is where I agree with Mr. Aggarwal. As far as we are concerned, oil palm is definitely a crop which requires a lot of rainfall. Having said that, in last almost a decade, a lot of effort has been made by companies as well as government, and almost 80-90% of our plantations have got drip irrigation. So the impact will be there, but not as much. Whereas animal feed, definitely, I'm not very glad to say, but in case the fodder is less, then cattle feed sales definitely are impacted positively. The cattle feed have grown in all years when there has been less fodder. So we are a conglomerate. Actually, we are in several businesses. So good monsoon or a bad monsoon does not impact us so much because the businesses hedge each other.
Mr. Yadav, just to follow up to the points that you made to Mr. Aggarwal with regards to multiple different products that you can bring in within the crop protection segment, and how that individual companies can benefit if they have those different multiple products. So for you at Godrej Agrovet, what are your pillars of strength in terms of crop protection, and where do you think the growth drivers are going to come from?
So crop protection business, we are largely in cotton and cotton, paddy, fruits and vegetables. So cotton and paddy mostly are irrigated. If you see, even if you have deficient rainfall in Punjab, Haryana, Western Uttar Pradesh, etc., but the canal network and the irrigation network is very good. Almost 85-90% of area is irrigated. So we definitely will not be affected in these areas, particularly where bulk of our sale is there. We are also planning to launch a few products. Unfortunately, we are in the silent period, so I cannot talk about them now. But I think all agri companies including us, we have a plan A, plan B, and the contingency plan is also put in place as soon as the monsoon starts playing truant sometime in June first week, where the focus is to maintain hygiene rather than sales, because we don't want to be left with toxic outstandings and expired stocks at the end of the season. So I think all companies have these contingency plans. We have been in this game for times immemorial. We know how to handle a good, bad and average monsoon. All companies do that, so I'm not very worried. This is part and parcel of the business we are in.
All right, Mr. Yadav and Mr. Aggarwal, thanks so very much for joining in. We're completely running out of time on this discussion, but really appreciate you taking out the time and speaking with us. Discussion going on the agri space. Both of them seem to be pretty okay about even if monsoons are below normal. And like they said, it's about the individual company and the different kind of product mixes that they have, that they counterbalance each other.
Yeah, but I think Godrej Agrovet made it amply clear that if there is an El Nino impact, then there will be an impact on the business in some ways or the other. Interesting to see what happens there. The market's absolutely flat, not much to talk about, just the watch out for the Indiabulls group stocks. They are all very, very active in trade, and some of the smaller banks, courtesy this Indiabulls Housing Finance LVB proposed merger, are doing well. Wrap it up on this leg of Indian Open from Devina and me and the team that put this show together. Thank you so much for watching. The FNO show comes forward and takes the action forward on the other side. Stay tuned.